Good morning. Welcome to Forex In Four. Today is Monday, November 14th, 2011. We're going to start out this morning taking a look at the euro because obviously euro's in a lot of news, but there's a lot of good stuff going on this week, and we're going to try and bang through it here all pretty quickly. Over the weekend, we had some updates in the government changes that are going on over in Europe. All right, we have Greece. They've got this Papademos guy, and he's got his government people in place. They're all set to take over. And it looks like things are going somewhat smoothly there, although they're still waiting for the actual deal to be finalized. Also in Italy, it's Berlusconi out and Monti in. So we talked about this guy Monti last week. He's a technocrat. Same thing with Papademos in Greece. Okay, these guys really have a focus on the economy, things of that nature. So hopefully he's going to help them implement these austerity measures that both these countries need in order to, service the debt, to get the help that they need, et cetera, et cetera. There's bond auction in Italy, and they were able to get it off. But it's funny. I was reading that now. I guess apparently yield spreads are our favorite pastime now of Italian citizens. So they're watching the difference between the German Bund and Italian debt and the spread as it rises and falls. So I guess that's something interesting there. But a lot of news going on this week, especially on the inflation data side. But again, I don't think that in Eurozone it's going to be anything important. It will be, but at the end of the day, right now, we're still waiting to make sure that all these governments get in place as quickly as possible, that they're committed to what they say that they're going to do. All right, but just to give you a quick rundown of what we're going to see out of Eurozone this week, we have industrial production figures came out this morning, came in lower than expected. All right, we're going to get German GDP figures on Tuesday, which are expected to be lower, the year-over-year number than last quarter. All right, we're going to get French GDP as well, but Germany is really the one that we're going to take a look at. Let's see what else we have. We have the ZEW surveys for economic sentiment coming out in Germany, as well as Eurozone GDP figures as well, also on Tuesday. So I'm just sort of going right down the list here, so bear with me. Wednesday we're going to get Eurozone CPI data, all right, and we just know that that Draghi just lowered interest rates over there. So if they do get some inflation, don't expect him to do anything about it anytime soon. All right, and then lastly, to round out the week, we're going to get German PPI data, which is going to be something to take a look at. So we know the economies are slowing. Everyone's talking about Europe hitting up perhaps a mild recession. All right, and you can see here, Euro just briefly touched that 138 level and started coming in. We called that one for you on chart of the day if you take a look at that last week. But you can see there was a nice little trade. You could just been right up above that pivot resistance there, up at about 138.50 with a stop, and you can see we pulled off. All right, so what else is going on this morning? Well, here's one to look at. Let's look at dollar yen. All right, you can see dollars falling versus yen, and I'm going to back this out a little bit because there was some rumors that there was further intervention going on here by the Ministry of Finance in Japan, and you can see now that all of a sudden, boom, yen's starting to strengthen again. And what happened? Well, they got their GDP figures that came in better than expected, 6% for the annualized versus 5.9%, and a lot of this is due to the recovery efforts that they're seeing there because of the earthquake. So this is the largest gain that they've had in I think it's a year and a half's time, but there's some question about whether or not that's going to be able to continue going forward. But obviously large government spending due to rebuilding and things like that, all these companies getting back online, all right, maybe doing a little bit of overproduction, really boosted GDP in Japan. So Japan's looking fairly strong there, and we also have a little bit of risk aversion going on in the markets. All right, with this whole euro deal going down, markets are just treading a little bit lightly. Equities in Asian markets were higher overnight, and then we had European equities open a little bit higher, only to start selling off. And we had the U.S. S&P futures flipped from mildly positive to mildly negative. So we got a little bit of risk aversion happening early this morning. So who else do we want to look at? Let's look at the pound here, because there's a lot of news coming out of the UK this week. And you can see that we've had this range-bound activity. Essentially, looks like 161.50 down to about 158 and a half. So you can really just sort of define this range right here that we've been seeing. But we had the pound selling off just prior to this 161. Now, what do we have happening here with the pound this week? that's extra important. We've got the couple things. We have their CPI data coming out. Okay, expected to show the year-over-year core number 3.2%, the headline figure 5.1%. That's awfully high. They're hoping that that comes down the Bank of England because they've added easing to the equation. They just upped their quantitative easing to try and help support declining economy a little bit. But if inflation gets out of hand, they're going to start seeing some stagflation there. So CPI data on Tuesday, as well as the retail price index as well. So that's big on Tuesday for the UK. On Wednesday, we're going to get their jobless claims and their unemployment rate. The unemployment is expected to tick higher to 8.2% from 8.1%. So we'll have to keep an eye on that. We're also going to get the Bank of England inflation report on Wednesday. So we got the CPI data on Tuesday, and then essentially they're going to come out on Wednesday, and I'm guessing they're going to try and refute it. I mean, inflation has been stubbornly high in the UK, and these guys are going to say, well, it's going to come off now as the economy slows, but we'll have to see. So those are the two big ones for the UK, but then we're actually going to get the retail sales figures on Thursday. They're expected to be negative or down a little bit, but the British consumers actually been hanging in there pretty well, so a little bit surprising on that. And we may just continue to trade this range, although if we back this out a little bit here, if we look on the 4-hour, okay, you can see that we're just starting to sort of make our way a little bit lower. And if we break these lows here, then perhaps we pull back down to this pivot area, say 158 and a quarter. All right, perhaps even lower if there's more risk going on from Eurozone. All right, so who else do we have here? Aussie selling off a little bit. All right, we're going to get the minutes from their RBA meeting on, when is it? Tomorrow. Okay, so they're going to tell us what they're thinking. Likely that they're willing to put up with a little bit of inflation for the time being if it occurs. Next move may be to actually lower interest rates there to try and kickstart the economy. If there's a slowdown happening, we know about Europe, but perhaps if China starts to slow significantly, that could be an issue. And then lastly, U.S. We've got some U.S. data coming out here this week that we want to keep an eye on. We've got on let's see here. Tuesday, advanced retail sales. That's going to be a big number. It's expected to come in lower, 0.3%. That looks awfully low to me, so it could be a situation where we come in and beat that. We've also got producer price index figures also on Tuesday. Have to keep an eye on that. That'll be a little bit of an inflationary gauge for us. Empire Manufacturing also on Tuesday will show us what's happening as far as some production. It's where it's the New York reading. So it's going to give us an idea what's happening. Then on Wednesday we get U.S. CPI data. All right, that's going to let us know where we are in the inflationary stage of the game. And if you look around at oil prices here, let's just take a quick peek on the chart. All right, if we look at, I don't have oil up, sorry, but oil's up around $100 right now a barrel, so that's moving much higher. I got to get oil back on the chart. I'll do that for us next time, but oil's been moving higher. It's not going to show up in this time's inflationary data, but guess what? It's certainly going to be there next time. So, we know about QE2, potential for QE3, and the dollar weakness we have. All right, let's see, anything else here? We've got this debt commission happening, and then to round out the week, not much else happening with the exception of Canadian CPI data. And you'll see here this morning, I'll just show you dollar CAD, which is going to be off a little bit on the risk aversion, but not much happening. Tight range there for dollar CAD. So a lot of inflationary data, but don't expect central banks to really do anything about it, even if it comes in higher than expected. All right, right now everybody's concerned about a global slowdown, so they're trying to keep rates low to encourage lending, to encourage consumption, to encourage buying, to encourage activity, to encourage demand. Okay, and right now I can't say that they're winning the battle, but we may have to put up with some inflationary pressures for a little while. So that's really what we're looking at today. A little bit of risk aversion to start the day. We'll see if anything can happen today to flip this around, but not a whole heck of a lot happening this morning, especially here in the U.S. So that's what we're looking at today, folks. Good trading to all.